Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, as always, thanks for coming on the show.
You're welcome, Brian.
Now, before we get your insights, David, let's take a first look at crypto markets. Bitcoin is at 34,781.6. It's down 0.28%. Ethereum is at 2,099. It's down 0.99%, so pretty flat overall. But let's take a look at how regional markets are performing, and that's where the interesting things start. SGX is up 1.34%. Bursa Malaysia is at 1,542. It's down 0.36%. The Nikkei is at 28,814. It's pretty flat at 0.01% up. Shanghai Composite is at 3,581.72. It's up 0.24%. Hang Seng is down 0.16% at 28,948.75. The ASX 200 is up 0.59% at 7,344.3. And rounding up the numbers, we've got the Kospi, which is at 3,303.39. It's up 0.51%. David, markets are pretty mixed. Tell us why.
Well, I think we're halfway through the year, and I think probably a lot of the fund managers at the moment have done what they need to do. It's called window dressing, and what they do is they present their results to investors, and I think generally what they've done is make their portfolios look reasonably presentable in order to encourage those investors, particularly those in unit trusts and stuff, to say, hey, you know, it's been a pretty good 6 months of the year. Let's hope that the second 6 months is going to be as good as the first half.
Now, since it's end of the quarter and end of the first half of the year, perhaps, David, today we could take a look at how global markets have performed. And then we get your insights into some of maybe the star performers and some of them who've done not so well. Now, one of the markets that has not done so well, which is a market that you like, is Bursa Malaysia. The KLCI is one of the worst performing markets this year. It's actually down -5%. Now, could you give us some views on how you view the market, especially coming into the second half of the year?
Well, you know, it's a bit like a football game where you are 2-0 up in the first half, and then you think, well, the other side will say we're 2-0 down, and then suddenly they come back and score 3 goals or 4 goals in the second half. I think that is what we're hoping for as far as Bursa Malaysia is concerned. But if we have a look at Bursa Malaysia, I think there are obvious reasons why it has underperformed many of the, not only the regional markets, but markets around the world as well, Brian. It's because they haven't handled the pandemic properly. I'm trying to be as diplomatic as possible, but they just haven't handled it properly. And if we have a look at many of the regional markets that haven't done well, countries such as Indonesia, Philippines, the reason is because they were probably a little too complacent about COVID-19, and it's come back and bit them on the nose. But, you know, there was a very famous ice hockey player called Wayne Gretzky who said, you should skate to where the puck is going to be, not where it is now. And all we can do, Brian, is to look forward to the time when most Malaysians will be inoculated, vaccinated against COVID-19, and maybe the second half of the year will be better than the first half. That's all I can say. But what is really quite interesting, Brian, is you know I am an income and a value investor, and I look for values. I look for value in the market. And when you have a look at the Malaysian market, there does appear to be value there. And so what you can do is to say, if I look at Malaysia and I look at, say, the US, I would say that out of the two markets, I would sooner be in Malaysia now than in the US, because the US is looking quite toppy. It's had a pretty good first 6 months. Malaysia is looking relatively cheap, and it's had a terrible 6 months. So what would you prefer to do? Would you prefer to buy something that is cheap or something that is already quite expensive?
Absolutely, because the Dow Jones is up for the year 12%. Nasdaq is up about 12%. The other one that's regional, the other two regional markets that have done very well, ASX 200 is up 12% as well. And the Straits Times, right in your backyard, David, is up 10% for the year.
Yeah, well, I think sometimes you have to have a look at these markets and have a look at the indices and see what are the companies that have been driving that index forward. In the case of America, what we can probably say is that they have some pretty fantastic tech companies. So
yes.
If you have a look at things like the Dow Jones Industrial, Microsoft has done well, Apple has done well, Salesforce has done well, 3M has done well. So those are the main drivers for that particular index. You look at the Nasdaq, well, it goes without saying that the Nasdaq is full of high technology companies, and they've all done well. Singapore has done well primarily because the real estate investment trust, the Singapore property market seems to be quite strong.
And the bank.
And the banks, yeah. And so therefore, we can probably sort of conclude that on a granular level, when we have a look at each one of the indices, they've done well because the components within that index has done well. We can say that Singapore hasn't got technology companies, but it certainly has a lot of real estate investment trusts. And the REITs have demonstrated throughout 2020 that, sure, you know, they were hit a little, but they were still able to generate that income that was required to pay their investors. There was a brief lull in the distributions that they were able to pay out, but now they've come back very strongly. And the banks are looking forward to being able to resume their dividends. So those are probably some of the reasons. What does surprise me a little, Brian, is the Sensex over in India. When I said that those countries that have been adversely affected by COVID-19, Philippines, Indonesia, Malaysia, their stock markets have been down. But what is quite surprising is that India has done well, even though it hasn't properly handled.
Is that partially to do with the fact that there's a lot of foreign investment fund flows there in terms of, and looking at long-term opportunities?
I think so. And that is probably also why we shouldn't dismiss those regional markets, such as Indonesia, Philippines, and Malaysia. We shouldn't really dismiss them out of hand. Yes, they're going through a pretty tough patch at the moment, but if I was a betting man, which I'm not, but if I was a betting man, I would say that those three indices will probably end up being a lot higher than where they are at the moment in 6 months' time. So by December the 31st, 2021, I would expect them to recover very strongly, and I would expect funds to start flowing back into those countries again, simply because they are cheap, Brian.
Absolutely, and thank you very much, David, for your insight. I think just like last year, on the 30th and the 31st of December, we're going to have a roundup show, and I'm going to hold you to that.
Thanks very much, Brian. Thank you.
David, thanks for your insights. We've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please like and subscribe to our Facebook and LinkedIn platforms, as well as our website. Thank you very much for tuning in.